I just took a $10,500 payout in 14 trading days using one free tool on TradingView. And the big reveal is the Gann Box. In this video, I'm going to break down exactly how you too can use this tool completely for free on TradingView to get your first futures payout. Let's get right into it. I'm an advocate for saving money and staying simple. Everything that I'm about to show you on this TradingView chart you can do for free, no subscription needed. The first thing you're going to want to do is go to Gann and Fibonacci tools, go down to Gann Box, and highlight the star icon to add it to your favorites. Next, click on the Gann Box, drag it anywhere on your chart, click the cog icon for settings, activate 0, 1, and 0.5, and then deactivate all of the time levels. You can customize whatever color you want. I like to keep mine neutral. Now that you have that, you have the 0%, 50%, and 100% retracement levels. I use these to mark out the London high, London 50, and London low. Make sure that you activate the weak magnet underneath the magnet tools. This snaps to whatever level forms the high or low. It makes it easier for you to identify as opposed to zooming way in and then making sure that you're lined up with the wick. And that's about it. The other thing that I have activated is volume. Volume is there for validation reasons. If the volume's decreasing as price is going up, it means it's probably an invalid move to the upside, vice versa. The next thing that you're doing is the London 50 and previous day's 50. T-Trades also refers to it as equilibrium. I like to refer to it as previous day's 50 just because it lines up better with a London 50, whatever you want to do. For the London 50, the model that you are trading is you mark out the London low to London high. That time frame, and I know London session isn't technically 4 a.m. to 9:15 a.m. EST, but it's close enough for me. So London low is any low formed between 4 a.m. and 9:15 a.m. EST. In this case, our London low is right at the 4 a.m. candle. And our London high was formed at about 7 o'clock, and then it revisited at 8:30. That forms your range. So you use your Gann Box tool, and I'll actually delete this one so you can see exactly what I do. Make sure you have your weak magnet activated. Go right to that London low, and you can see it snaps to it for you. And then drag it to the London high, and then drag it out to the right until you have it lined up within a couple cents. Now that you have that charted for the day, those are your levels that you're taking the reaction off of. You have your London low, your London 50, and your London high. At London 50, I take 2 MNQ. At London high or low, I take 1 MNQ. And your stop loss is a 15-minute closure above or below the level that you took that trade on. Always make sure that you're on the 15-minute time frame, as the 5-minute time frame offers quite a few fake outs. 15-minute time frame is going to help significantly with that. So again, go back to the 15-minute. In this case, I would have taken longs at about 10:15, 10:30, 2 MNQ. My stop loss was a 15-minute closure below. As you can see, price went from 526 all the way up to 531.80. It's about a 250 point move. On 2 MNQ, that's $1,000. If you take 1 MNQ, $500. Obviously, you're not going to hold it the whole way. I secure my trades for about $60 profit. I believe that's my average win, and I'll pull that up right now on my top step. My average win is 64.24. My average loss is 67.34. My average win duration, 11 minutes. My average loss duration is 24 minutes. Average trade duration itself, 15 minutes, 34 seconds. Keep it as simple as possible. Your validation or invalidation is based on where that candle closes. The next thing you're going to add to your chart is your previous day's 50. Now this is any high or low made between 4 a.m. EST and that 7:45 p.m. EST candle. In this case, our low was made right at London at 4 a.m. and our high was made up here at about 11 o'clock. Now we drag that out to the right, and there are your next 3 levels to take a play at. This gives you your bias for the day. If we are below if we're below previous day's 50, that is a bearish bias for the day. If we are above it, that is a bullish bias for the day. So how did I read this chart Friday, June 13th going into the day? This is the only thing that I draw on my charts, these two Gann boxes for the day, previous day's 50 and London 50. You could wake up at 8:30 a.m., draw them in, and then you're trading right at open. For previous day's 50, we were under that, so I have a bearish bias going into the day. And then for the London 50, we are above that London 50, so I have a bullish bias for the day. What I would have liked to see was price go from the London 50, first test previous day's low, which it did, and then next test would be at previous day's 50, which it did. London 50 bounced. You can take 2 MNQ, long, and your price target is London high. You can secure the trade there. I do in most cases. I like to secure my trades as I just showed you, $60 in the profit. Or you can let it run with a stop loss at break even, stop loss at $50 in the profit, wherever tickles your fancy. After you break London high, your next target is previous day's low. If it is already within previous day's low or previous day's range, your next target is previous day 50 or previous day high. In this case, our next target was previous day's low. We broke that, continued up. Next target would be previous day's 50. Beautiful move up to previous day's 50, and then that confirms your bearish bias for the day as we rejected off of previous day's 50 extremely hard. And then where did we bounce again? London 50, over and over and over again into close. And that is the trading model itself. You take 2 MNQ at either of the 50s, you take 1 MNQ at the high or low of that range, and your stop loss is a 15-minute closure. Now in this case, if I had taken shorts at previous day's 50, I would have been stopped out right here at noon. The stop loss on that trade, maybe $50. Or you could have been a little risky, held it, re-entered on that retest at 12:45, and then capitalized on the 250-point move back to the downside. This is all I do every single day, and that's why my trading platform on Top Step looks like this. It's a simple strategy, free tool on TradingView, weak magnet, and the Gann box. That's it. There's no fancy indicators on here. There's no complex terms that I'm not going to understand. Simple as that. Now for the Asia session trading, all you do is mark out that previous day's 50. So for this session, Friday, June 13th, bad example, actually there's no futures trading on Friday afternoon. Let's go into Monday. So Monday, we're marking out our previous day's 50. 4 a.m. was the low, and then our high was made at about 11:15. Drag that out to the right. Our reaction levels for Asia's session after that 8 p.m. close is any rejection at the 50, the 0, or the 1. That's it. Now, what I do on Top Step, since you can't see Asia session on Qs for TradingView, whatever your trading platform is, whether it be Tradeovate, Project X, Top Step X, all I do is kind of eyeball it. So in this case, for Monday, June 16th, I'll scroll back to Monday, June 16th. This is our range for the day. I eyeball it over to MNQ. So there's our low, there's our high, drag it out to the right. Now remember, London 50 is made at 4 a.m., but this one is a little different, isn't it? Looks a little bit odd. That's where I go and eyeball it. I look for candles that I can identify in both charts. In this case, let's look at 9:15. Okay, that previous day's 50 lines up with about the top of that opening red candle. So I go and identify that candle on Qs. Okay, it's right there. I drag it up until it conforms to where it should be on Qs. So that looks about right. Lines up with the high of that candle, lines up with the high of that 9:15 candle, drag it out to the right. That 50 is where I'm taking the reactions for Asia session. I couldn't say that. A little embarrassing there. That 50 is where I'm taking those reactions for the 8 p.m. to, say I trade until midnight, whatever it might be. In this case, we had a fake out, came back over. I could have taken bounces off all those 50 retests. In this case, we wicked to it about 5 times. This one would have been a fake out. Okay, you get stopped out. Your risk was, I was in way in because of how low the risk was. Close below on the 15 minute. Let's say you entered right at 22,040. This candle closed at 22,038. You just risked 2 points for that upside potential. And then the very next candle actually pushed up 70 points. So be it. The strategy itself has a very low risk because you typically retest the 50 depending on which way you're going. Now, you might be thinking to yourself, this guy's telling me the 50, but he's right on the day. What an idiot. The losses are going to happen. As I just went over with this trade, the 50 is not always going to retest or bounce perfectly. The first example that I gave you for this London 50 was a perfect example. Doesn't always happen. Sometimes it closes just under, you get stopped out, and then the trade runs 70 points in the direction you wanted it to. That's okay. It's going to happen. For today's trading, this is why I ended up losing today. Now, as you can see, I don't have the 50s marked on MNQ because I trade them on Qs. Again, this is all free on TradingView. I'm going to use it for free. TradingView has very good data for Qs and ES, and that's why I prefer using Qs as opposed to going on MNQ. MNQ has some slippage, it has some errors on the reads. That's why I prefer Qs. For today, I marked out previous day's 50, Wednesday, June 18th. We had the market closed yesterday for Juneteenth, and then we had the market back open today on Friday. I marked out previous day's 50. The low was made after FOMC right here. This was all overnight trading, so I do not incorporate this. The 4 a.m. candle was right here. The low was made for FOMC. The high was made at about 10:30 in the morning. So that's my previous day's 50. Now my London 50, London low was right at 4 a.m., 4:45 a.m., excuse me. London high was made just before open at 9:15. That's my London 50. So I will draw that out real time so you can see. London low, weak magnet snap to it. London high, just kind of eyeball that one and drag it out to the right. Those are my levels to play for the day. We have our previous day's high, London high, previous day's 50 and London 50 lined up perfectly, and then previous day's low and London low. I took longs on the closure over previous day's high as well as London high with 1 MNQ. I averaged in a little bit to 3 MNQ max, ended up losing about 355 on that trade, and that was actually the worst trade that I've had on this account. Next, I took longs twice at previous day's 50 and London 50, and I ended up making about 250 bucks. Those were both 2 MNQ trades. The first one I secured for about 70. The second one I secured for about 130, 127, depending on slippage. And then as you can see, we fell through. I ended up losing about 103 on this. And then I traded a few more times with 1 MNQ, 2 MNQ, recovered about 130, 140 bucks with some losses thrown in there. So down 37 on the day. Not going to revenge trade. No need for that because the strategy is going to perform next week. And it's going to perform the week after that and the week after that. This is a volume-based strategy. That's why there's so many trades on my performance stats. This is a volume-based strategy, meaning that you take a trade, either 1 MNQ at the London high, previous day's high, 2 MNQ at the previous day's 50, London 50, or 1 MNQ at the previous day's low, London low. You're taking a trade every time you react at one of these levels. You can cut it, call it quits whenever you want to. As you can see, I typically do when I'm up. In this case, 200, I'm happy with that. 500, very happy with that. 1,600, ecstatic. Across 5 accounts, that $200 day is $1,000 bucks. $1,600 day, that's $8,000. $1,000 day, $5,000. Take the green when you see the green. Do not hold on to the position for the big home run. This is a base hit type strategy. Has about a 70% win rate, maybe a little bit higher, maybe a little bit lower. The thing that is going to adjust this is the trading psychology. If you take one loss, like I did today, 350 bucks, and then you immediately just start revenge trading longs until it either hits your price target or you blow the account, this is not the strategy's fault. That is your fault. The trading psychology is very, very easy with this because your plan, your stop loss, and your take profit is all presented to you. If you hit London 50, your next target is London low or London high. If you hit previous day's 50, your next target is previous day's high or previous day's low. See the green when you take the green. That's exactly what I do. If I'm up 50 bucks, I'm very happy to take $50 times 5 accounts, 250 bucks made in less than 15 minutes. If it retraces back down and hits that level again, I re-enter that same trade. Say it goes up 100 bucks like it did this morning. Very happy to take that 100 bucks times 5, $500 in less than 15 minutes. These are base hits that compound. 50 trades. Holy shit. That's a whole bunch of trades. It's way too many. He's over trading. Wait a minute. 785 bucks times 5, $3,500, almost 4,000 bucks. 52 trades. 41, 7, 22. What's going on here? You take a trade when it reacts at the levels, your stop loss, 15-minute closure, over, under, depending on where you get into the trade. If I get into it at the 50, stop loss is a 15-minute close, over or under. That's how simple the strategy is, and that's how simple you can make trading. There's no need for complex terms. There's no need for indicators that are going to muck up your chart. Like if I had rips or EMAs, VWAP, posty pivots, whatever it might be, this chart is a whole lot more difficult to read than a chart that looks like this. Keep it simple, stupid. That's the motto I go by. And you don't need a subscription for this. I do have a subscription because I like to look at other charts. But if you want to be as cheap as possible, you get one combine, futures account, whatever it might be, and TradingView for free. I hope you enjoyed this video. If you want to check out my live trading every single day within the Discord, that link is going to be in my YouTube bio as well as the description of this video. Any other questions, drop them in the comments. Drop a like, subscribe. I will see you guys later for another video. Peace out.